BYND, June 10th, 2019. So in this example, we are going to go over the BYND trade that I took on June 10th, 2019. This was a day trade, and the trade setup on this trade was a momentum play and a short squeeze, right? So this is how the pre-market looked for stock BYND on this day. So we are at 8 a.m. Eastern Standard Time. Pre-market, we have about an hour and a half to go until the market opens, and this is how BYND's chart looks. Now, why was BYND on our radar? Why was it on our watch list? Why are we focusing on this stock today? Now, BYND is on watch because yesterday they had earnings and they beat. And stock has been on a momentum run and looks like it will have a possible short squeeze today. Now, let's break down this chart right here. Now, when you guys take a look at this chart real quick, you guys can see there's not a lot of data. Even though I'm on a 1 year, 1 day chart, we only have about 1 to 2 months worth of data. Now, why is that? That's because BYND just recently had an IPO. They just recently had an IPO where they launched in the stock market. This stock is fairly new in the overall market. You guys can see stock opened up at around 45, went to a high of $100 the other day, right? So it's fairly new. Ever since the stock IPO'd, the stock has been making newer highs. You guys can see launch opened at 45, went to about 80, pulled back, went higher to about close to 90, pulled back again, made a new high. So stock has been making higher highs, pretty solid move up, pretty solid momentum since the IPO. Now, looking at yesterday, what happened yesterday? Yesterday, stock BYND had earnings. They beat earnings. After they beat earnings, stock gapped up and made a 50% move up. You guys can see, went from 100 to about 150. Made a 50% jump in 1 day after earnings. Now, the reason the 50% jump happened wasn't primarily because of them just beating earnings. It was because there's a lot of people shorting this stock. The short interest for BYND is very high. And also the cost of borrowing BYND is also very high. Now, when the cost of borrowing some stocks becomes very expensive, it's very hard for people to hold on to their short positions for a long period of time. And that's what's happening with BYND. So when they beat earnings, a lot of people ran to cover their short position, which caused aggressive buying pressure. And now BYND is up 38% from yesterday. And now when we look at it today, we'll understand how it's performing today as well. So this is all the price action until yesterday. We create our levels just to understand what's going on. So now what we're going to do is we're going to look at the pre-market activity for today and see what's happening right now in pre-market. Now, when we go in the pre-market, this is what we see happening. So this was yesterday, right? You guys can see stock has earnings. Stock goes to 125 pre-market. Opens at 130 and then makes a $20 move up yesterday. Today, the stock is up again. Stock is up very, very, very strong again. So it is 9 a.m. Eastern Standard Time. Stock is up 15% on over 500,000 shares. So that's a strong, strong move. So far in pre-market, that's a very, very strong move. The stock is making all-time highs in pre-market. Now, in situations like this, I've seen a few different scenarios happen. Sometimes what tends to happen is the stock tends to open up, and as it opens up, it consolidates, tries to make a quick high, and then dumps. Some other times, what tends to happen is the stock consolidates and dumps. And some other times, it may just continuously make higher highs and keep rallying. We don't know what's going to happen. It's very hard for us to predict what's going to happen at this particular time. But what we can do is we can start creating a game plan and understand the logistics of the possibilities of what this stock may do. So we are ready if and when it showcases a potential play. If it showcases it's going higher, if it showcases aggressive buying pressure, we now know that a short squeeze is possibly happening. Now, looking at this stock at this current stage, once again, it's at 153 at the moment. Pre-market high 158. We would want to see that break with strong buying power, strong volume. And if that can happen, we now know that there's a high possibility of this stock just rallying, making a higher high, because once again, a lot of people are trying to short this at this particular moment because it is obviously very, very overvalued. So that's how pre-market is looking right now. But our game plan is not, hey, we're going to get in and it's going to go up, or we're going to get in and it's going to go down. No, we wait for price action to showcase something. Once, or if it showcases something, we will then take on a trade. So now let's look at the market internals. Let's look at what the overall market is showing us. Now, when we look at the market internals, what we see is we're looking at SPY. We got SPY here, we got ES, and we have VIX. Now, when we look at SPY, what do we see? We see markets are looking strong and facing resistance pre-market. So if you guys take a look, you can see markets are facing resistance. They're looking strong pre-market, and they have been also rallying the past few days, right? You can see the market's been rallying. VIX has been going down. Once again, VIX represents the fear factor of the market. And looking at VIX, we can see that the fear factor is going down, which showcases that the market is getting stronger. Okay. Now, when we look at this, what is the reasoning for this? The reasoning is China tariffs are delayed and tariffs on Mexico are delayed as well. This is causing a rally in the market. So this rally has been caused because of those particular reasons, right? And this is a very, very strong sign for the overall market. So the market is looking strong pre-market. We have good news. We've had good news for the past few days. And also today, news on the Mexico tariffs being delayed came out too, which is very, very good news for the overall market. So market looks strong. There may be possible buying pressure, but once again, this is not enough for us to just go and buy BYND. This is just painting the big picture so we understand what's happening with the overall market. Now, once again, what is our game plan? Our game plan with BYND. So our game plan is watch and open, see if buying pressure is still strong. If so, look to take a long position. It looks like the stock will squeeze. There will possibly be a short squeeze. Once again, if the stock opens, we don't take the trade right off the bat. We want to see some price action move on the upside. Remember, we're not trading on the first candle, the second candle. We want to wait a little bit. We want to see some confirmation. We want to see some nice prints on the tape, and then we want to take on this trade. So now let's jump onto the charts and let's break this trade down. All right, so right here we're looking at stock BYND. Let's go to a bigger time frame real quick. Right now, when you look at a bigger time frame, once again, this is what we see. Stock recently IPO'd on May 2nd. After the IPO, you guys can see stock has been going up like crazy, and yesterday had a huge move up. Right now, when we go to like a 4-hour chart, you can see a strong move up after earnings, a nice squeeze right into 158. It's making an all-time high. Now, when we go to pre-market activity, this is what we see in the pre-market. Right, we see that the stock went all the way to 158, got rejected, pulled back to about 151, and now it is trying to break 158 again. So now, once again, what we want to do before this kind of opens up is we want to create our levels, understand the importance of each level, knowing that this was a pre-market high, knowing that if we want to get into this trade, we want to see a break on 158. And obviously, guys, it's not just that simple where, oh, we get in if it breaks the pre-market high. No. We want to see, is that break strong? We want to see, is it supported by aggressive buyers? What's the tape printing? What's going on with the overall market? These are things that we as traders have to focus on to get a better understanding and to have a higher confirmation. So what we're going to do right now is we are going to open up the 5 and the 1-minute chart. So as you guys can see, we have the 1-minute chart on the left, and we have the 5-minute chart right here. So I'm going to zoom in, and what we're going to do is I'm going to play this right here. So I'm going to play it, and then I'm going to walk you through minute by minute on how the stock moved, where I got in, and then show you the trade aftermath once we kind of go through the trade. Okay, so now let's see. Market is opening up in 3 seconds. Ready? 1, 2, 3, and boom. Market is open. Now, like I mentioned, we don't trade the first minute. That's not what we're looking to do. I'm not a fan of touching a stock right on the first minute. Stock goes a lot of different ways. It gets very messy, very hard to trade. So right now, what I want you guys just to see is I just want you to see the price action fluctuating the first few minutes. Now you can see it's going to be all over the place, go up, go down. Once again, we're not taking a trade right there. This is once again the first minute. We are now going on to the second minute. Now you can see, and even on the second minute, look at what it's trying to do. It's trying to break the pre-market high. A lot of amateurs get in here. They're like, oh, it's at 158.4, because you guys can see it hit 158.4 for a second, and people get in. No, we want to see and wait for a strong close. We don't want to get in the first minute or two. We want to wait, right? Even right now, there's no trade. It's pushing down a little bit, but we have our critical levels around 151 and 147. We're not touching this yet. We're only in the third minute. Now you can see where the stock fell to. Where buying pressure kicked in, where selling pressure kicked in, right at our levels that we've established. And how did we get these levels? We got them just by simply looking at existing price action. We didn't go into anything new. We got it by looking at what's already there. And right now, still, you guys can see very choppy, very sideways, no real movement, no real direction, no real play right now, just trading sideways, right? And this is where, once again, the patience game kicks in, guys. As traders, you have to be extremely patient at these points. You can't get into trades and get extremely aggressive right now. There's no trade going on right now, so you have to be patient. You can see it's going to the 151, 152 area, pushing down, right? Next candle, next 5-minute candle starting, next 1-minute candle starting too. No trade right now. It's pushing. Now, if this breaks 147, and let's just say I'm possibly looking to trade this, and a strong break below 147, I might look to short it, right? Depending on how it closes, depending on what happens around that 147 area. Now you can see once it goes to that 147 area, it's holding. It broke our intraday support, and when we go to our daily support and resistance, it's still holding our daily support. Just to kind of pause and show you guys for a second. If you look at this right here, look at this. This is our daily support, 147.62. Just going to go back to the 5-minute. Right. Now you guys can see it's all over the place. The first 7 minutes, we're in 7 minutes. All over the place right now, guys. It's all over the place. And by the way, I have it forwarded 3x. So it's moving up 3x faster. That's why it's like, oh, wow, it's already been 7 minutes. It's just moving a lot faster. Right. You can see still continuously moving, still moving all over the place. No real direction yet. No real play yet. Once again, our play is if it can break 158 on a strong break. Now, the great thing about this play so far is on the open, it got rejected at the pre-market high twice. Now, we know that there are sellers sitting there. We know that there's a lot of aggressive sellers sitting here. Why? Because that was the pre-market high, as you guys can see. And on the open, it got rejected there not once, but twice. Now, obviously, if it can break that level, that would showcase us a strong move on the upside. Why? Because think about it. This is where short sellers stepped in. This is where short sellers stepped in. Not once, but twice. Since short sellers stepped in here twice, what's going on at this particular moment is that there's a lot of short sellers stepping in here. So basically, if the stock breaks 158 on strong buying pressure, those short sellers are now going to be required to basically cover their position. And if they're required to cover their position, that means that they have to buy, which then creates aggressive buying pressure, right? So we have our outline. And right now, all we're doing, guys, is we're sitting on our hands. We're waiting for this trade to work in our favor. If it does, we execute. If it does not work, we don't execute. We don't take on a trade. We don't do anything at all. We're just watching. That's all what we're doing. And as you guys see, when you start day trading, you'll notice a lot of times if you were just patient and you just watched price action and you waited for the move to come to you or give you a solid entry point, you would have made money. Where a lot of people go wrong is they rush to get into trades because it's like, oh, the time is running out or I have to make a trade. No, if the trade does not do what you want it to do, do not take on the trade. Now, looking at this until now, no real trade, nothing's going on. It's very messy price action, right? We don't have anything strong going on at all. Now, what we're going to do real quick is I'm going to open up the market. Right here, I have SPY. You can see SPY's opening up strong. Strong move up for SPY. Right? You can see SPY open up rallying, making a new high. You guys can also see when we go to pre-market, the market has been rallying for the past few days, and it's also looking extremely strong on the open today, right? So the market is very, very strong. It's looking powerful so far. Alongside with the market, this has not presented any play yet. It's very sideways. It's very choppy. All we care about is we care about the break of 158 and what it does around that area. And once again, since this is a momentum play, since we know that this can possibly squeeze, a squeeze above 158 could be massive. We can maybe see a push to 165, maybe 170. There's no telling where it'll squeeze to, but there is a strong possibility that this may continuously make a higher high. And the only thing we have to do right now, and the only thing we are going to do, is we're just going to be patient. We're not going to do anything else besides be patient. Right? We're not going to go and look at this in any other way. We are just going to be patient, and we're just going to watch price action. This is where, once again, sitting on your hands becomes extremely important, guys. We're just being patient. Now, this is where it gets interesting. So, I'll start pausing it for you guys over here. Right now, if you see, I'm going to pause it and just show you something. Now, what started happening here, you guys can see a surge of volume. Volume went up 3x, right? You can see on the open, volume is always high, and then volume starts dying down, and volume kicks in now. Now, that automatically becomes a very, very interesting thing to me where, okay, volume is surging up. It's getting closer to the pre-market high. It's getting closer to the high of the day. So as of right now, it's giving me some confidence that this may possibly break. Now, this is where reading the tape becomes extremely important. Now, I want to see what's happening. I want to read the prints. I want to see what's going on. Now, when I read the tape right here and I see the prints, you can see the bid, right? And the ask. The ask is printing 158, 158. They want to see 158. People are looking to sell at 158, which is very good. Look at the prints. 158s are printing, guys. The prints are also printing closer to the ask side. People are very, very aggressive. They're taking up the shares. That is a sign of strong buying pressure. Very strong buying pressure. Look at this. The bid at 157.27. The ask at 157.70. Look at the prints on the ask, on the ask, on the ask. One print closer to the bid, but you can see continuously close to the ask, close to the ask, close to the ask. You can see over and over again. And then it prints right at 158. Right, it's printing right on the ask. All the ask has to do is increase its ask, and we'll see a huge push up. Right, 157.98, 99, 99, 99, hitting the ask, hitting the ask. So right here is where the stock becomes a very strong target for us. We're like, wow. There's buying pressure kicking in. This stock is taking another shot right at that 158 mark. So this is where we as traders get ready to maybe process an order. Maybe depending on your trading style, you don't want to take on the first position right away. You might want to take on a smaller position. Now, when you guys take a look here, look at that. Look at the print. Look at what happens to the print. 158, 158, 158. 158 gets pushed up on the ask, and look at the prints. Look at what happens on the prints. The prints start going higher. The bid starts holding at 158, right? This is showcasing us a very, very strong and aggressive buying pressure. Now, when you tend to see this and you see a lot of prints, especially on a stock that looks like it's going to squeeze, and you see a lot of aggressive buying, that could also be short sellers panicking. It could be them saying, oh man, this is looking like it's going to make a newer high. This is looking like it's going to continue, right? So at this point, my entry was around here, right? My entry was around 158.10. So I'm just going to take the trade right there. Now, my entry was at that point. One reason that gave me this entry instead of me waiting for a continuation candle was primarily the prints. The prints gave me a very, very strong confirmation. And you can see even when it got rejected, the buyer stepped right back in. The buyer stepped back in. Look at the ask going to 159s. Aggressive move up. Now, what I want you guys to keep in mind is stocks like this that, you know, are potential short plays. They have a very, very high possibility of making a huge run. So at this point, I'm in the play. I have 500 shares. I like what I see on the tape. I like what I see on time and sales. So it's looking very, very strong to me. Now, obviously, if this fails and gets rejected, my exit point could be immediate around 157, 156. I'm out. right? But as of right now, the tape is giving me strong confirmation. And the reason tape is giving me strong confirmation is because I'm also looking at these critical levels. That critical level is getting broken. I also see volume spike, right? So I see a lot of interest. Now, this is where it gets very interesting. Now, I did make a few mistakes on this trade. I'll show you what the mistakes were. You can see it makes a high at 161, gets rejected. This is where things start getting a little scary, right? Obviously, looking at this when we fast forward is a lot different than when we're in the trade. So at this point, you get in and you start seeing this rejection, and you as a trader go, oh man, did I just get trapped? Was that trapped by market makers that did trap me in? Now, these thoughts start kicking in and you start thinking about 1,000,010 things. You know, your P&L starts getting red. It starts going all over the place. You start questioning everything. Now, a few things about this, and this is obviously something I realized after. In the moment, I wasn't able to think about that. But one thing I realized was there was not a lot of aggressive selling. There was a fight between bulls and bears here, but there wasn't any clear direction like, oh, bears are going to dump, bulls are going to make this go higher. It was very hard from my point of view to kind of read the tape at that moment and understand what price is saying or what price is kind of telling me. But now where I messed up is on the next candle, which you guys are going to see. Now, you can see strong move up, makes a move from 154 to 160, a 6-point move up. Obviously, it has to take a break, which it kind of does. And now this is where things get very, very interesting. If you guys watch the tape, look at the bid, look at the ask. Aggressive buying. Breaks to 161. Watch what happens at 161. Boom. Buyers are extremely strong. They're making this go higher and higher. Where I messed up is I did not add more to my position. This was a solid point for me to add more. I should have added more. I should have increased my position. I should have maybe bought 500 more shares or 200 more shares or added something more, because this, looking at it from a new trade, was a very, very high probability trade, especially the way the tape was looking at this particular moment at 952. I did not do that. I was very focused on, oh, I'm in the position, I'm in 500 shares, let me just hold through. Now, as you guys can see, crazy spikes in the price. Now, these spikes in the price are happening because, like I mentioned, this stock has been squeezing. When there's a short squeeze on a stock like this, right, that short squeeze becomes very, very, very powerful. Another thing about BYND that I kind of forgot to talk about in the beginning is that the float of this stock is very small, right? And that's because since they IPO'd, there's a lot of shares that are locked up. They're not available to the mass public. So because of that, there's not a lot of quantity out. So when there's not a lot of quantity out and there's a short float, there's a small float, it's easier for a stock to make higher highs, and it's easier for the stock to also dump, right? Since this is a potential short squeeze and it has a small float, it's very easy for this to squeeze on the upside. Now, as you guys can see, this is just making 10-point moves up, 5-point moves up on a minute candle. And that's extremely, extremely, extremely strong. Now, let's keep watching this. All right. Let's see what's going on. Now, that's where things get scary, right? When you see something like that. When you see something like that, things get very, very scary where it's like, oh man, what's going on, right? Things are getting extremely scary. Just opening up SPY real quick. SPY got rejected at 289, holding at 289.30. About a 70, 60 cent, 50 cent move down. Nothing really crazy. It's not dumping. It's just pulling back, maybe holding for the day, maybe sideways action. But this is not something that we should be worried or concerned about where it's, oh, the SPY is selling off and the market is selling off. It's still holding pretty strong, right? Now going back to this, 167 got rejected very hard. Let's see how 167's print. You can see 167 on the ask, 167 on the ask, 167 on the ask. Let's see if 167 gets higher. Are the buyers or sellers aggressive, or what is going on? Another thing you guys should see, there's high slippage here, right? The bid might be at 165, the ask may be at 167, $1 to $1.50 slippage at times, right? You guys can see right here. But 167, what's happening at 167, 167, 167, right? Huge, huge slippage. There's a huge spread between the bid and ask right here. 167, obviously it's going to have a hard time fighting that. We can clearly see that. This is where trade management kicks in, guys. If you're in a trade and you see something like this, you can either say, hey, I'm scared, or I'm unsure, I'm not confident, I want to lock some profits in. And if you want to do that, by all means, go ahead, lock in half of your position, take the trade. But like I said, wait for the candle to close, watch your levels, and see what you're willing to take onto the trade, right? 167 and 162. If you're willing to take profits at 167, cool. If not, are you willing to take a loss at 162, right? These things have to be factored in very, very quickly, especially when you are day trading. You can't, make it up later on. You have to decide that now. Hey, I'm gonna hold this position. I'm gonna wait a little bit instead of taking the trade after a few minutes, right? What's happening? 167 is obviously having a hard time. As 167 is having a hard time, what am I looking for this stock to do? Okay, it breaks 167, 168. Like I said, when these type of stocks squeeze, they squeeze very, very strong. And that's what we see right now. We see a very powerful squeeze happening with the stock. A very powerful squeeze, right? It makes a high at 170. Let's see 170 prints. Let's see what happens on 170 prints. 170, boom, 171. Look at that squeeze, guys. That right there is a beautiful example of a short squeeze. The sellers are increasing their ask. Look, 173, 174, 175. The ask just keeps going higher and higher. Short sellers are scrambling. They're running away, and you can see the P&L is just jumping. Now, when you guys see stuff like this, and as a beginner or as someone that's at an intermediate level, and you're like, oh man, I don't know what to do. I'm up 10 grand. I'm up 5 grand. I'm up a very large amount on one trade, and I'm confused. Guys, just take profits. Right? If you're unsure, take profits, because look at how this is moving. It goes to 180, 185, 184, 183, 187. Like it's moving up like crazy, and it's moving down just as crazy. Now, this is kind of where I took my first exit. I took some off the table because it got too wild for me. I took half off the table. I think I took 200 or 250 shares off. And then on the next candle and so on, I took my remaining position off. And I'll show you guys the aftermath of that and entries and exits. But that was where I took my exit. I'll show you my exit was obviously not at 186, 184. I wish it was, but I think I got out at like 178, 177. I'll show you guys the entries and exits now. But when you see stuff like this, this is a clear indication of a short squeeze. Clear indication. Shorts are getting squeezed out like crazy. And if you're ever in a position where you make a lot of money in a short period of time, the best thing you can do is take it off the table. Take half off the table. Lock in the profits. Why? Because it becomes a lot easier for you mentally and emotionally to trade the remaining half, because now you've locked in profits, and you've also, besides locking in profits, you've also reduced your risk amount, right? So that's why holding the position, the full position, is not the best idea. Taking some off the table, especially when things get out of control, is very, very important. Now I'm just going to show you guys the aftermath of this trade. What happened throughout the full day. But before I do that, let's jump into my entries and exits. Let's take a look at that real quick. All right, so here's my entries and exits. You guys can see I have a screenshot of the trade. Like I mentioned before, all my trades that I took, guys, if you guys go on Umar Ashraf Trades Instagram, I posted each and every single one of my trades. I just screenshotted what I posted there. I uploaded it here instead of me going into my brokerage account, going through each one of my trades and uploading, the confirmation and all this stuff, just making it way too hectic. Just screenshotting that and showing that, so you guys can see 158.10. That was my entry, 500 shares. My position size was about 85,000, so I had 85,000 in this trade. And at this point, when I screenshotted it, I was up 6,400, but I walked out the trade at $8,700 profit. Now, if you guys look at the trade right here, I entered first position 500 and 158.10, and then I scaled down twice. One time was at 250 shares, the other time was 250 shares, and these are my entry and exit points, right? Now, what I liked about this trade, I think I had a phenomenal entry point. What I didn't like is I should have added more to my size on continuation play. Like when I mentioned to you guys, I think when it broke the 160 and it continued after the rally, I think I should have added more. But instead, I was just kind of in that freeze moment and I didn't react properly. I think if I added more, could have maybe made another 4 or 5 grand on top of what I made, which would have worked out very great. But I just didn't add more. And the other thing I liked the idea that this was a great add to my watch list for the day. Now, this is something I want to actually talk about, right? This is something that takes time and experience for people to understand. Finding stocks that look like they're on a momentum run or stocks that are hot, you have to be kind of in the market. You can't separate yourself from the market and not listen to the noise and the chit chat and not know this. BYND was a hot stock for about a month and a half, or ever since it IPO'd, and there was a lot of noise going on about how hard it is to short it, how it's overvalued. And then when it did have earnings and it did spike up, immediately that became something that I was very interested in, and that's why I'm very happy that I was able to add this to my watch list. And the only reason I was able to do that is because I was in the market. Like, I kept my ears open, I was watching the market, I was watching all the noise, and that's where this popped up. And I was like, hey, this may be a potential trade. Now, if I didn't know that, I would have missed this whole squeeze play on the upside. Now, looking at the chart real quick, you guys can see entry was around there, exit was around that point. Now, once again, as I was mentioning before, very happy with the idea of potentially seeing a short play, not a short play, a short squeeze, I'm sorry. Very happy with the idea that I was able to read that, and that's the only reason this was on my watch list. All right, so looking at this right here, you guys can see we're on a 5-minute chart for BYND and looking at the overall day. After it made its first initial squeeze to 186, it tried again throughout the day, rejected, and then throughout the day just traded sideways. Now, a few things I want to bring up about this once again is, number one, when these plays happen and you make money and you're up a lot for the day and you're up a good amount, more than you anticipated, guys, the best thing to do is just turn away and walk away, right? Because once these plays happen the first time or maybe even the second time, they kind of get exhausted and then they're done. What a lot of people do, especially people that first start out in the market, is they get very addicted to these type of plays. They make quick money and it's like, wow, I just made $4,000. I made $5,000 in like 8 minutes, 4 minutes, 10 minutes. And then they get addicted to that high, and then they want to keep doing the same thing again throughout the day with the same stock. And what happens is they try to play these moves, and these moves become dead. So what they start doing is the profit they made here, they start giving it away in between these areas because they're still on the high of making such a quick amount of money and a large amount of money in a short period of time that they're like, oh, I need to make $4,000, $5,000 again. This stock did it for me. It's got to do it again. No, guys, if you made this trade and it was a high probability trade and you made your money, cool. Watch the stock again, but now watch for a continuation play of maybe 186. If it starts trading sideways, don't try to create your own plays, because now all you're going to do is burn through money. Going through this stock on a larger time frame, let's look at what happened. You can see, once again, the reason this was on my watch list, saw earnings, saw yesterday they were up 50%, and after I saw they were up 50% at a point, I immediately knew that this is a very great play for a continuation play, a very good stock that may possibly squeeze more, right, if it has the potential. And then seeing in the pre-market, right, seeing today in the pre-market that it was up 10%, right, 15%, whatever it was up, that immediately gave me an idea, hey, I think you should watch BYND today. This should be one of the stocks that you focus on. And obviously when it broke that pre-market high, obviously when it broke that opening level of 158, the stock rallied about 20 points to the upside, right? About 18 points exact, but 20 points to the upside. And if we can catch some of that, that's huge. And once again, the whole idea is to find it, right? Create a setup. If the setup happens, execute. That's it, guys. And if you make your money on it once, walk away and try to do this over and over again, only when the market gives you plays. Now, for people that traded this and made money, they try to do it over and over again and probably gave it away, right? Gave their profits away. Or some people that had a plan, were watching this, missed this play, they start going, oh man, I missed this play. I'm such an idiot. I wish I did better, yada, yada, yada. And then what they start doing is then they start trading throughout the day because they missed the first play. And if you just realize the emotional aspect of this, you're going to realize that it's just about having clarity and understanding what you're going to do, following through with that, and having a control on your mind and executing based on your plan. And if you're able to do that every single day continuously, you'll have a very, very phenomenal trading career. If not, you're going to make it very, very hard for yourself.